Hello, listeners. I am Deepak Jotwani, Assistant Vice President and Sector Head at ICRA Limited. And through this podcast, I'll be sharing our views on the recent trends and outlook on the Indian pharmaceutical sector. ICRA's sample set of 16 leading Indian pharmaceutical companies registered revenue growth of around 5% on a YoY basis in first quarter of fiscal 23. The revenue growth rate in the second quarter of fiscal 23 is also estimated to be largely in line with that of the previous quarter. ICRA has also maintained its growth estimates for its sample set at around 6 to 7%, with the top line growing to around 2 lakh crore in fiscal 23, marginally lower than the growth of 7.7% in fiscal year 22. This growth is expected to be supported by 6 to 8% YY growth in the domestic market, 4 to 6% in the European business, and 11 to 13% in the emerging markets, even as growth in the US business is expected to be muted at 1 to 3% at best. The operating profit margin for the sample set is expected to contract by around 120 to 150 basis points in fiscal 23 as the industry continues to grapple with cost inflation and pricing pressures. In quarter one of fiscal 23, revenues from the European business for the ICRA sample set witnessed a YY contraction of around 1.2% due to pricing pressures, base effect, and higher channel inventory, in addition to unfavorable foreign exchange movement. While no material demand contraction has been witnessed thus far, the industry remains cautious given the inflationary pressures and an uncertain macroeconomic environment in the European market. Going forward, market conditions in Europe are expected to remain challenging, even as the same are expected to be mitigated selectively to a certain extent by expansion in product offerings, market share gains in existing products, and entry into new geographies in Europe. As for the US market, the revenue growth in quarter one of fiscal 23 was supported by depreciation of the INR against the USD and new product introductions. ICRA expects mid to high single digit price erosion to continue to exert pressure over the near term, resulting in muted revenue growth for the Indian pharmaceutical companies from the US generic market in fiscal 23. For the domestic market, the WPI-linked price hike for NLEM products sustained healthy volumes across both chronic and acute segments, and new product introductions and annual price hikes for non-NLEM products are expected to support the revenue growth for the ICRA sample set in fiscal 23. The outlook for the Indian pharmaceutical industry remains stable, led by expectations of continued steady revenue growth and comfortable margins, despite minor contraction expected in this fiscal. ICRA expects the sample set's capital structure and coverage indicators to remain comfortable despite higher capex and R&D expenses, which are likely to be partly funded through strong internal accrual generation and available surplus liquidity. Thank you for listening and stay tuned for our upcoming podcast.